All right, let's begin the show. And today on the show, as an expert, I have with me Nisreen Mamaji, CFP Moneyworks Financial Services. Nisreen, hi, welcome to the show. And once again, let's give our WhatsApp number and email ID to all the viewers who are watching the show live and might want to send across their questions. 865-797-4571, our WhatsApp number, the moneyshow@etnow.tv, our email ID. All right, let's begin. And Nisreen, we will take Bharat's question first. He says that he's 47 years old and he wants to generate corpus of 20 crores for his retirement. His investment horizon is for 20 years. And the funds that he has in his portfolio are, he's trying to exit from PGIM India and Axis Mutual Fund, investing in Quant and Motilal Mid Cap and Tata Small Cap, PGIM India Mid Cap, Axis Mid Cap, SBI Focused. He's got Motilal Oswal Nasdaq 100 ETF, Motilal Oswal S&P 500 Index, and Mira Asset Large and Mid Cap, Parag Parikh Flexi Cap, ICICI Pru Technology, Nippon India Small Cap, Axis Small Cap. That's all in terms of details that I have with me. 20 crores, 20 years. Yeah, Nisreen.
Okay, so hi, thank you for having me on the show, Kavita. A very interesting query and also pretty interesting, a mix of funds. So the asset allocation seems to be quite all right. I wouldn't want him to change anything and actually, take any tax liability by redemptions. And, so what I would recommend is that at this rate, if we calculate a compounded annualized growth rate, a CAGR of about 13% for the next 21 years, what we expect from an SIP of 1,70,000 per month is about 2.21 crores. So that's what his expectation would be. I'm sorry, 22 crores. 22 crores is what his value will be after 21 years at a 13% CAGR. So what he can possibly do is that you can definitely switch the SIPs that you are doing in the PGIM and the Axis Fund. Don't redeem, but just kind of stop what you're doing and reinvest in Quant and Tata and Motilal Oswal, which is your choices. You have a complete, asset allocation strategy currently because you have focus, you have mid caps, you have the Nasdaq Motilal 100 ETF also, you have the S&P 500 index, you have the large and mid of Mire, long-term equity also. Technology you've kept, I think, for a particular reason. You have one thematic fund. And otherwise, all your other funds are basically diversified in whether it is small cap, mid cap, or large cap. So one bet that you've taken possibly for the longer term is a tech, theme. I would also suggest that you take a rather like a business cycle fund or an India opportunity fund. You replace the tech theme because you don't know how this particular theme is going to do for the next 20 odd years. So I would recommend that you take a basket of kind of themes and let the fund manager take a call on what is going to run for the next 3 to 4 years. Because in a business cycle fund or an India opportunity kind of a fund, an opportunistic kind of a fund, the fund manager decides the themes every 3-4 years and sees what is currently in in momentum, what is currently in favor, and then he would make the switch as far as the theme goes. So I think that you cannot, you don't need to take a call yourself on a particular theme. So that is the one that I would, recommend that you change, and you can go in for a Sundaram business cycle fund or a DSP business cycle fund, which has been recently launched. Or you can go in for an innovation fund, whereby basically it is a diversified fund, but the fund will invest in themes which are up and coming. So there will be AI, there will be digital, there will be, Zomatos and the Swiggies and Zeptos of the world. So anything which is sort of very current, which we're expecting to be new age, that will be included in an innovation fund. So you can take that also. You can take a small allocation of, the 10,000 rupees that you're currently putting in technology and switch it to this. Okay. Otherwise, you seem to be fine. And you can definitely stop the PGIM and Axis if you wish. To exit, don't redeem, just continue with what you have. But for the future SIPs, you can restart in Tata or Quant. Kavita?
All right. I don't have him on the phone line, but then I hope he's got all his questions answered. So you have asked him to stop SIP in Quant and Tata and Motilal Oswal. All right, let's move on. I think I have Shruti on the phone line. No, I think this question is via email. So she's from Bangalore and she says that she's been doing SIP in Baroda BNP Large and Mid Cap, Franklin India Equity Savings Fund, and she also has Helios Flexi Cap and UTI Large and Mid Cap. Interesting. I don't have her on the phone line, but let's talk about new AMCs like Helios and Zerodha and Navi, where they have a typical strategy. Zerodha is completely passive based fund house. We see a lot of these new AMCs getting placed in investor portfolio. Now, we are talking about old versus new. If I have to compare them, we have the country's largest AMC, which is SBI Mutual Fund. Then we have the ICICI Mutual Fund, HDFC Mutual Fund. Why would anyone leave these stalwarts and go for new AMCs? What would be the reason according to you? And is that the right strategy, to pick up as far as your hard-earned money is concerned? You really want to trust those fund managers who have that experience, who have seen market cycles, who have proved their performance, right, Nisreen?
No, absolutely. What you say is absolutely right, Kavita. But, even in the newer asset management companies, whether it is White Oak, whether it is Helios, whether it is any of the newer ones, ITI, etc., who are not new anymore, they've already been in the industry for the last 3 years. The fund management is actually a very experienced fund management team and possibly have, transferred from any of the larger and the older asset management companies. So having said that, if you go by the team itself, they will be probably, very experienced in the industry, and they are not going to be very newcomers in the industry. So obviously, there is always space for newer asset management companies to enter the market. As far as the investor goes, I mean, they should do the due diligence for the particular fund and the fund manager, whether it is old or whether it is new, because you just want to make sure that, your fund possibly will perform. Now, the problem is that in the newer funds or the newer fund houses, there is not much history. So there is no basis of comparison. If you're looking at, 1 year, 3 year, 5 year kind of performance figures, that may not be easily available to you because obviously the fund or the fund house hasn't been around for that very long. So you are taking a slightly, sort of a risk on this kind of a fund or a fund house. But, if you have done your due diligence, if you have checked where the fund manager, what was his or her history prior to coming to a particular company, like say maybe Helios's FlexiCap fund that you have recently joined. So you're obviously not, very sure how the performance is going to be. Because typically how retail investors would be gauging a fund is through, is this fund in quartile 1 for the last 8 quarters? Now, most of the funds basically keep on changing. They will be in the first quartile, say, for, say about 7, 8 quarters. Then they dip, to maybe quartile 3, and then again they come back. So in the top 50 to 20, if you select a fund, you should be all right. But please be rest assured that every call that a fund manager takes in terms of stock is not going to play out. So it's very possible that, between the quartiles, they keep on changing. If you're taking a longer term view, obviously what you're expected to do in terms of doing your due diligence is checking for an asset management company, whose credentials meet your risk appetite, and looking for a particular fund or a fund manager who you have seen history with, So it's okay if the asset management company doesn't have history as long as your fund manager does.
Right.
So definitely do your due diligence and make sure that you are on the right track.
That's very important amount of homework and the points to be considered. Let's quickly look at her funds also. She has Baroda BNP Large and Mid Cap, Franklin India Equity Savings, Helios Flexi Cap, and UTI Large and Mid Cap. So 12.5K in each funds.
Yeah, the funds seem to be okay. There's a kind of an equal strategy in each. So there's 50,000 invested. So after 5 years, at about 13% compounded annualized growth rate, you can expect about, say 42 lakhs in your account. So, 42 lakhs, 40,000. So this is like a projected figure based on a compounded annualized growth rate of about 13%. So all the very best, and make sure that you review your portfolio every couple of years and make sure that the funds that you've taken are on track and, haven't dipped to a large extent. So whether it is an old fund or a new fund, make sure that you are on track with your, goal expectation.
All right, let's take one question and then we'll go for a quick break. Dr. Mudasir's question I will take. He says that he's 40 years old and he is talking about his investment portfolio. He's from Delhi. He's got Parag Parikh Flexi Cap, Quant Flexi Cap, Motilal Mid Cap, Motilal Oswal ERSS Fund, and he has total SI and a small cap also. Total SIP is per month is 2,25,000. He wants to know if any changes needed in terms of his fund mix, and the goal is 10 CR corpus. Time horizon is somewhere around 10 to 12 years. And how much more do you think he needs to invest, because he's also ready for a step up, 10%? I don't have him on the phone line, but yeah, the choice of funds, I think it's a very well done portfolio. What will you say?
Absolutely. I mean, there is absolutely no change that I would like to suggest. So well done, Dr. Mudasir. Mudasir, you've done a very good job in, fund selection. All your funds are possibly in quartile 1 and 2, for the longest time. You've taken Quant Flexi, Parak Parak Flexi, then you've got a mid cap, an ELSS, and a small cap. So you've done a pretty good job. You can have one multi cap. So out of Parak Parak Flexi and Quant Flexi, you can substitute one for a multi-cap fund. You'll have a higher exposure to mid and small caps in that sense. So you can go for, Bandhan multi-cap or Mahindra Manu multi-cap fund. Otherwise, you seem to be, quite all right. So your goal is, about in 10 to 12 years, you want about 10 crore rupees. So at the rate that you are investing, along with the 10% step up, in 12 years, with the 12% compounded annualized growth rate, you will have, in your investment account about 11.3 crores. So in 12 years, you probably overachieved, provided you do a 10% step up. Okay. So all the very best to you. Your funds seem to be great. A small suggestion for a substitution. Otherwise, you seem to be fine. You're going to meet your goal expectation, but you have to, of course, review it every 2 to 3 years to make sure that the, compounded annualized growth rate of 12% at which we are forecasting is actually achievable or not, because your tenure is about 12 years away. So 11.3 crores in about 12 years,
Okay.
Provided you get 12% carry.
Yeah.
Kavita.
All right. Let's take a quick break. I have Mr. Sunil on the phone line from Punjab. We will take up his question, but then a quick break. And before that, let me just flash our WhatsApp number and email ID for all the viewers who are watching the show live and want to send across their questions. See you after this break. Welcome back. You're watching The Money Show, and Nisreen Mamaji is answering your portfolio queries today, and I'm joined by Sunil, our viewer from Punjab. Hi Sunil, good evening.
Good evening, Kaltana.
Thank you so much for sending us your question. And you are investing in Motilal Oswal Large and Mid Cap, Kotak Emerging, Helios Flexi Cap. You also have ICICI Value Discovery and Helios Balance Advantage. You also have Quant Small Cap. Your goal is 1 CR in 15 years. Is that right, Sunil? Anything else you want to add to your question?
Yes, ma'am. Yes, ma'am. Please confirm all these funds are okay. I would like to shift to any other fund.
Sure. Do you have a financial advisor, or you've just selected these funds on your own?
Me from myself. I am not a...
All right. I think you've done a good job, Nisreen.
Yes.
You've done a great job, as Kavita rightly mentioned. So you selected, about 5,000 rupees in each of your SIPs. You have also mentioned that you've invested in a balance advantage fund. If this is for your shorter term liquidity, then yes, it makes a lot of sense. Otherwise, since your goal is about 15 years away, you can substitute that with, say, a multi-cap fund, or or another mid and small cap fund, because you have one small cap and you have Kotak Emerging, and you have ICICI Value Discovery, which will have some amount of small and mids. So, you can take a slightly more aggressive call only with that particular fund as far as the 5,000 of Helios Balance Advantage goes. But if you have kept that in your fund with a view that you could use it for the shorter midterm liquidity requirements, then it's absolutely great that you have it in your portfolio, because sometimes, there are requirements and you may not want to touch the longer term portfolio. So then it makes sense, okay? So basically your crore is, you need 1 crore in 15 years. And if we kind of project at 13% compounded annualized growth rate, you're probably going to have about 1.6 crores at the end of your tenure. So you are going to overachieve, but that's perfectly fine, because 13% may or may not be achievable in the next 15 years. So it's always better to overachieve rather than underachieve. So keep a track of your portfolio. Make sure that you review it every few years, and to make sure that you're on track, or some of these funds are giving you the performance that you desire. So in your case, you've overachieved by, it's going to be 1.65 crore approximately if we, project at 13% compounded annualized growth rate. So all the very best in your investing journey.
Anything else you want to ask, Nisreen?
No, ma'am.
Okay, all the best. Let's move on. I have Mr. Narayan from Bangalore. Hi, good evening, sir.
Good evening.
Sir, you want a suggestion for ETFs, right?
Correct.
Any specific reason why only ETFs?
No, I'm only understood that the risk is less in the ETF, and having a SIP would be advantageous rather than equity.
Okay. So tell me one thing. What's the time frame you're looking at for investment?
Can be 2 to 3 years.
2 to 3 years. Are you also looking at some fixed income option, like a debt mutual fund?
No, not at this point in time.
Okay, perfect. Nisreen, pretty clear. 5 to 6 ETFs for 3 years time horizon.
All right. So I would recommend, Mr. Narayan hasn't given much background, but since he specifically asked for these particular ETFs, I would recommend Motilal Oswal Nasdaq 100 ETF, HDFC Gold Exchange Traded ETF, SBI ETF Nifty Next 50, Motilal Oswal Mid Cap 100 ETF, and one thematic fund, because I'm presuming that the term is a little longer. So we've kind of suggested the consumption fund to him. So Nippon ETF, which is a consumption-oriented fund. So this will give a nice basket of various, strategies. We've also given you international with Nasdaq, gold also with the HDFC fund, and then Nifty Next 50, which is, still a large cap fund, but possibly, beyond the first 50 of the Nifty. And the mid-cap strategy through the 100 ETF of Motilal Oswal. So try to give you a complete strategy, included gold, and all the best to you in your investing journey. 5 to 6 ETFs as you requested.
Right. All the best with that, Mr. Narayan. And with that, it's time up on the show as well. Thank you so much, Nisreen, for taking time out today and helping our viewers with their financial portfolio queries. And for our viewers, I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.